Prudent Corporate Advisory is a recently listed stock and has done phenomenally well on the markets for two reasons. One, we are witnessing a lifetime of financialization of assets happening in India, which basically means the younger generation as well as existing savers are moving their money from time deposits, gold, and real estate into mutual funds, into stocks. And one of the biggest beneficiaries has been Mr. Shah. Sir, how do you see the trend over the next 2 or 3 years when we talk about financialization of assets?
So I think probably I can tell you that India is on the cusp of significant financialization journey of the retail investors. And as you are aware that when it comes to the investment alternatives, I think there are a lot of alternatives which has already vanished, like your cryptos, your Ponzi schemes, or these or that. So from a retail investors, I think mutual fund industry has created a significant headway by establishing SIP as a very strong vehicle of investment by the retail. And I believe that the retail participation in the mutual fund industry through SIP route has just begun. And we believe that this is a story which is structurally very strong long-term story. You might say some short-term hiccups might come, but overall, 3 years, 5 years, we believe that the retail investors participating in mutual fund is going to be a very, very strong things. If you look at from a global perspective, also today we are probably, if you look at the AUM to GDP ratio, India is hardly at about 16-17% of GDP, which is invested into a mutual fund. If you look at global standards, I think probably US is the biggest market where it is 142% of GDP, and global average is also about 70-72%. So I think we have a very strong probably participation which is yet to happen as far as retail investors are concerned.
Right. You have about 15,042,000 clients as far as the overall picture is concerned, and somewhere like 2 crore 34,000 live SIFs at the moment with the Prudent Corporate Advisory. I'm so sorry, it's 20 lakh 34,000. Mr. Shah, where is the growth that you see coming in? How is your expansion in tier 2, tier 3 cities coming up from now till about 36 months from today? What will be the reach and the depth of Prudent Corporate Advisory?
Today, if you look at from the point of reach, I can give you the number. Let's say, for example, probably we have almost 98% of India's PIN code covered as far as our investors are concerned. So we have people investing through Prudent on our platform almost from 98% of India's PIN code. As far as my physical presence is concerned, we have almost about 117 branches, which covers all the nook and corner of the country. However, expansion and reaching out to a tier 2 and tier 3 cities is something which is a regular exercise for us, and we believe that we'll continue to add wherever there is a need for us to expand. So probably we are at 117 today. We were about 105 branches before 1.5 years. So in last 1.5, 2 years, we had almost about 14, 15 branches. And I believe that adding at least about 7 and 10 branches in next 2-3 years will continue to be a strong focus. However, I can tell you frankly, what is important would be to still cover the cities where we are already present. So I think there is a strong focus for us to become very, very deep as far as the areas where we are already there. So I think the story is very, very strong. Frankly, retail story is very, very strong, and our business model is a very different model because we represent India's retail wealth management by way of aligning our interests with almost 28,000 India's mutual fund distributors. So if you look at, if country has about 125,000 mutual fund distributors, almost 27,000 are working with us. So we represent every fifth guy who is working for the mutual fund industry, and there we believe that a lot of people are now having comfort of working on the platform, and that story also looks very, very strong.
Okay. Mr. Shah, if you could hear me clearly, I wanted to understand a little bit more on your revenue mix currently. You have distribution side of the mutual fund business. You also started the insurance products business as well. Tell us, what is your revenue contribution from each of these major segments? Where do you see them growing to going forward from here? And how does it compare with the other asset management companies right there in the industry?
I think we are very, very strongly focused on the mutual fund because we believe that that is the space where retail can easily invest. So that was number one. And second, we believe that protection is something which is a very, very strongly required area. So when we diversified from a mutual fund, we look at insurance as a very strong business vertical for us. And within insurance, we strongly focus on health and the life. So these are the very strong areas, and specifically our focus on health is very, very strong. So if you look at the revenue mix as of last quarter, which is about April, May, June, 87% revenue comes from mutual fund distribution. Roughly about 9% comes from insurance, and we also distribute the other product like your what you call the PMS, AIF, small cases, your liquid loans. So there are a lot of product which we also distribute, and we have a small stockbroking piece. So these all put together gives us a revenue of about 8-9%. Going forward, if I tell you, say mutual fund itself is on a very strong growth pedestal, mainly because if you look at the AUM growth of Prudent comes from two sources. One is the mark to market gain, which we believe that industry will be able to generate about 12, 13, 14% over a period of next 5 years, which is I think we all would be in the same opinion. And second comes by way of new money which we bring in. So if you look at as far as my new money is concerned, currently I have a SIP big of 600 crore, which is if you analyze it, it's almost about 7,200 crore comes by SIP. And that 7,200 crore is almost about 10% of my current AUM. So I think 10 to 12% we will bring by way of new money, and 10 to 12% should come by way of mark to market gain. So we have very strong feelers that in next 3 to 5 years, our AUM growth should continue to be in the range of about 20-22%. So that is very strong. So we are not looking at the market expansion, getting newer partners, or we becoming more deeper into the market where we are already there. So I'm just saying that organically we should grow at over 20-22% on the mutual fund itself. And insurance, I think it's an industry, it's a business which we started in last 3-4 years. We reached to 8-9%. So there we believe that insurance would probably be able to grow at a little bit better than the mutual fund industry, because we have a very lower base and we are trying to convert that into a business. So overall, we taken a target on the mutual fund side is concerned that we want to reach to a 1 lakh crore in next 2 years time frame, and we reach to a 1,000 crore of SIP book also in next 2 years. So we are at 70,000, close to 70,000 crore currently in the AUM side, and 600 crore on the SIP book. So 600 crore to 1,000 crore and 70,000 crore to a 1 lakh crore. That's the internal target we have taken.
Right. Mr. Shah, you are unable to hide your smile, and it's perfectly acceptable because of the kind of demand that you are seeing for your business, and that's the reason why the stock has doubled from its IPO price of about 630 rupees to about 1190 now. The other thing I wanted to understand from your side is, what is the percentage that Prudent Corporate Advisory makes from mutual funds as far as the SIP is concerned in terms of advisory cost? Because that is somewhere which SEBI is trying to reduce through its consultations with the AMCs. What is that percentage that you enjoy at the moment?
So if you look at, let's say if you look at last year's earning, or let's say first quarter earning, what we earn by way of distributing the mutual fund product is roughly about 95 basis point from the total AUM which we manage. Now, if you look at the total AUM which we Prudent is managing today, our AUM is comprising of equity and debt, and 95% of money which we manage is from the equity. So within the equity, our earning is about 95 basis points, which I believe that I don't think it's something which is significantly higher cost for the retail investors to have some advisor. Because if you look at today, if I give you the numbers, as you already say that 70,000 crore of AUM, 15-16 lakh customers. So average comes to about roughly about 4.5 lakh rupees, right? So that 4.5 lakh rupees kind of an average which you handle the people, then earning is roughly about 1%. And we are the distributors of distributors, in the sense that we have a conglomerate of 27,000 people who work with us. And if we earn 1%, roughly 67-68% we share with them. So my ground level IFA earn 60 to 70 basis point for the business which we does, and about 25 to 30% is retained by us, which we manage for the distribution. distribution business. So overall, we believe that we are at a juncture where the cost is not something which is significantly higher compared to our global standards. And yeah, but you are absolutely right. SEBI is reviewing the current TR structures, but we are of the view that the expected new TR structure is likely to come from regulator, may not be too disruptive for the industry.
Mr. Shah, I wanted to ask you on your assets under management. Currently, they're around 55,000 crores. Tell me if I'm wrong. And where do you foresee the entire growth? Do you see it doubling? Do you have a vision for 1 lakh crore rupees target for your assets under management soon?
So, Sakshi, as I told you that we started the year at 56,000 crore and now we are close to 70,000 crore. So we already grew by 25% the current year, thanks to strong market rally which has happened in the current year. So the mark to market gain has been very, very strong. So if I look at when I moved from 55,000 to 70,000 crore roughly, I think the new money which I brought in the current year is hardly about, let's say about 400, 500 crore per month. And that was our run rate. So last year, our net sales was 5,000 crore. This year, our target of doing net sales was close to about 5,000 crore. We are on track as far as net sales is concerned, but mark to market gain has been very, very strong. So again, I'm just trying to reiterate that when I'm expecting that my AUM should move to a 1 lakh crore, I'm assuming that market will be in our favor, which will continue to deliver about 12% from here on, and will be able to bring at least 12 to 13% by of net sales. And that net sales is strongly supported by my 600 crore monthly SIP book.
So 600 crores is coming in to Prudent Advisory via SIPs, which are actually invested in top 7 or 8 AMCs. Mr. Shah, I was looking at the revenue mix where a lot of money, a large percentage of the revenue comes from top 5 or 6 AMCs where this, I'm sure, 600 crore monthly SIP is deployed. Is there an element of risk in this revenue stream, provided 1 or 2 AMCs decided to move away from you?
I think this, because probably you can understand that it's very difficult for them to move away. When you are saying they have to move away from me, means they have to say that I don't want to work with Prudent as a distributor. And we represent very strong retail. Today, if you look at Prudent is a very important piece in the asset management business because we are not like the large wealth outfit. We bring the business from almost about 15 lakh customers, 27,000 distributors from 115 cities. We also bring a lot of business. My entire business comes through a technology platform called Funds Bazaar. So if you look at the kind of business which we bring for the asset management companies, it is very, very retail centric and it's a very pure long only business which we bring. So I don't see any reason for somebody to move away from us. That is number one. Number two is, say the distributors are required by everybody. Right? So I think it's something which is very difficult for me to give an answer because it's very unlikely. And when you say that my business maximum business comes from top 7 AMC, that's the industry standard also. Because today, if you look at top 7 AMCs contribute 65% of the AUM, and I'm also in line with that number. So my AUM is also similarly represented because I represent very, very retail, right? So when you are representing retail of the industry, you are normally going to be aligned with the industry numbers, except 1 or 2 AMC where my number might vary by about 2-3%, not significantly, but.
Okay. Sir, could you also help us understand what is the EBIT margin outlook for you and any particular risks to the margin that you have currently?
So there are two elements as far as when I'm talking about the EBITDA margin because we believe that we are also into a very strong operating leverage story because almost all the fixed and variable cost has been taken care of by the organization. It's a business where we generate significant cash. It doesn't require any kind of working capital. And last year we generated 125 crore of cash, and I'm assuming that I'm on the trajectory of growing at 20-25%, which is we believe that we should be able to continue to generate the cash. Now coming to the EBITDA, if I am growing my top line at 20%, if my expenditure are not growing at the same rate, because I'm assuming my expenditure should grow at about say 2-3% more than the inflation. So inflation expected to be about 7-8%. So my operating expense should grow in the range of 12-13%. EBITDA margin, the top line should grow at about 20-25%. So overall, I assume that in the next 3 to 5 years, my profitability margin and the EBITDA should improve. Now, only risk which you rightly asked about is the regulatory change, right? Because today we earn about 95 basis point. Now, if some changes comes and if that margin comes down by about, let's say, 2, 3, 4 basis point, then entire book would be repriced. So I think that is the only risk which we have today. And second would be, as you are aware about, we are into a cyclical business. We never knew what will happen to the market. If market falls by 30, 40%, if operating leverage is positive for me, if AUM falls, it is also negative for me. So to give you the answer, regulatory risk, market risk, apart from these two, I think it's a very strong operating story and we'll be able to maintain the margins.
Mr. Shah, how much of your revenue comes from mutual fund advisory? You've always, you've already started to move, add revenue streams into your business through selling and reselling of insurance. At the moment, what is the revenue coming from mutual funds in terms of advisory? The percentage.
Sir, I think we are pure mutual fund distributors where the our earning comes from the AMC as a distributor, and we do have the RIA license, and we intended to work as a investment advisor also. But however, I think it's so today our RIA activity is absolutely not started by us. So the advisory business fee is very zero. The reason being that the regulatory requirement says that once you work with somebody as a distributor, you cannot provide the advice to the same customer. You're required to have the very strong segregation as far as advisory and the distribution is concerned from the client. Now, the biggest issue as far as working as an advisor is concerned is the collection of fees from these almost 15 lakh customers, sir. So if you let's just work with somebody with a 1% advisory fee, it's very difficult for you to do a collection from those as a fees is concerned. So you do not have a strong mechanism for fee collection. That's the reason we strongly remain on the distribution side. So advisory fee is absolutely zero.
Okay. Sir, could you also help us understand your own growth targets when it comes to profitability? A 45% surge to 28 crores is what we've already seen. Do you see a sustainable growth rate at 45% or so for the entire fiscal year 2024? What could be, the target that one could see?
So I think the my numbers are visible. I has already told you that my AUM has grown by about 25% from the starting of the year, and that will definitely translate into a growth on my top line. And operating expenditure is not growing at a healthy, it's not growing at the same pace. So overall, we never give the forward guidance, but I believe that we should do much better in the current year. Also on the mutual fund side, on the insurance side, I think it's going to be a consolidation year because, as you all are aware, that we have a very strong book on the life insurance side, and last year was a significantly better year on the life insurance, mainly because of the regulatory changes which came in the last year, specifically on the taxation side. And I think the current year is little bit subdued on the LI business side. So probably insurance will not do that great like what we did last year, but overall mutual fund should continue to do much better.
On especially the retail participation in the last 4 months, the way it has grown, do you think it is sustainable going forward as well? And is that a factor that you consider when you, at least look at your own internal targets of growth?
So yeah, because this is a business where some kind of cyclicality which might come in, and which I think you all will agree that it's something which cannot be forecasted, right? You never know what will happen to a market, how the sentiment will turn. However, if you look at the current year, April, May, June, and July, first 4 months were very bad, because if we used to do a 500 crore of net sales in last 2 years, I think April, May, June, July, my net sales was only about 250 crore. So the retail participation, when market started railing, I think they were basically against the market. When market was going up significantly, they were redeeming the money in the April, May, June, July. However, last 2 months has been reasonably good. I think we are now doing a net sales of about 500 crores. So again, we have seen stability has came, but there is not a euphoria kind of a situation when it comes to a retail. Retail is just consistently participating through a SIP. So there are 2 points. When I look at the growth, I believe the normally SIP discontinuation is very slow, and hence, as I have a 600 crore of SIP book, it is going to protect me significantly on my overall collection is concerned. Hence, I believe if market is not significantly, it doesn't have a huge turbulence, I should be able to achieve my target in a easier way.
Thanks, Mr. Shah, for speaking to us. And, of course, commendable, performance for you, both on the top line, the bottom line, as well as what we have seen in the terms of growth that you're already saying, the numbers that are speaking for themselves. And we hope this performance can really continue for you going forward. Here's hoping that we can have you back on the show to discuss more about the business outlook very soon.
If you like the video, do like, comment, share and subscribe.